Hey, what's going on, everyone? It's Tim here with the TMA Connection. It's a local podcast that's focusing on a little bit of everything, basically real estate, entrepreneurship, growing the journey, finding inspirational people that are making a difference in the lives of others. And we do have a difference maker here today in the real estate field. We got Mr. Zac Hayes with Bayshore Mortgage Funding joining us today. What's going on, my friend?
What's going on, Tim? It's great to be here again. This is sort of round 3, but as far as the setup is concerned, this is kind of like a first time.
Yeah, I'm gonna have to think. I'm gonna have to look back. I think you might be the most interviewed podcast guest on the TMA Connection.
That's an award I don't hold lightly.
Yes,
and you know what I mean. So,
and this will be the 51st episode. And so out of 51, this will be the third time that you're on. Now, I think back before we were the TMA Connection was the very, very first time.
That was a while ago. We were in kind of like a lunchroom.
Yes.
Type of, it was like.
Oh yeah.
But it was a little raw, but it was good.
It was raw. It was
fun. Sometimes
you just gotta do a lot of crap before you get to the good stuff.
All this stuff wasn't available back then. Now,
I'm telling you.
Now there's more. Everybody's kind of following your lead a little bit, but you're ahead of the game.
I'm trying to be.
Yeah.
I'm trying to be. So speaking of being ahead of the game,
yeah.
This is going to be a good transition.
I like that.
What we're doing today basically is preparing our home buyers for 2025.
Mm-hmm.
Certainly, we're going into a new presidential thing, and not to speak too much about politics or anything like that, but as we're recording this right now, it is December, and people are considering buying a house, and there are certain concerns that they might have with interest rates, inventory, all that stuff. But basically, having you here today to prepare our home buyers, a lot of questions that come your way as a loan officer, I want you to kind of answer those today so that people feel a little bit more comfortable with maybe pulling the trigger in 2025 and beyond, right. Depending on when you hear this, because once it's on the internet, it's on there forever. So yeah. We are in December 2024 right now, about to approach a new year, and I really just want to try to help people feel a little bit more comfortable, especially first-time home buyers, in getting prepared for the home buying process.
Yeah.
So,
yeah. One thing I can say just about some of these tips that we're going to go over today, is that they're tips that you can sort of carry with you throughout maybe your financial lifespan, whatever you want to call it, as far as when you buy your first home, maybe even how you financially prepare to buy a new car or to expand your family or to buy an investment property. Is it a good idea to do something now or later?
Yeah. This could, or even if this is your second purchase, or you're moving up, you were a first-time home buyer a few years ago. If you bought a home before 2020, right, you're probably sitting on some equity right now.
Absolutely, and maybe a really good interest rate.
Yep, which is maybe holding people back from making a move. So
100%.
Let's talk about it all.
Okay.
All right.
Let's get into it, Tim.
So this is going to be a good one. So as we are looking at the lending market and different trends, what are you seeing as an impact for buyers as we're moving into this upcoming year?
Well, I mean, there's going to be a lot of hot button issues that you're going to see on the news that people are going to want to address, because it affects your sort of the day-to-day landscape of how the residential housing market will fluctuate. But at the same time, a lot of this stuff that you see in the market and a lot of these changes are going to be a slow burn, whether that be getting more equity, whether it be home prices stabilizing, whether that be rates going up or down or staying the same. A lot of this stuff doesn't happen overnight.
Yeah,
it's very quick. I mean, it's a very kind of a slow and gradual process, and that's by design.
Yeah,
volatility in the market.
Yeah,
with really any asset is what keeps speculative buyers out of the market. So anytime there's volatility, no one's going to sell today if their home price is going to be double in 6 months. No one's going to, buy now if they think home prices are going to go down in 6 months.
Yeah.
So volatility is what keeps speculative buyers out of the market. And that goes for almost any sort of investment. So one thing I can say just to get us started is, and this was sort of, part of our tips for first-time home buyers. But I think a lot of people need to take a deep breath and just like really put their goals and what they want ahead of trying to predict the market or predict the Fed or predict if there's going to be another COVID or predict if they're going to cut rates or raise rates or they're going to build new or, you know, a lot of this stuff, you know, when you do sit on the sideline, you end up missing an opportunity that probably would have went decent for you.
Sure.
If you bought a house in 2022, maybe you didn't have a dream interest rate, you're probably up 15% in your equity.
Yeah, sure.
And people thought home prices were crazy in 2022.
Yeah.
So this isn't to scare people to say like home prices are never going to come down or you're never going to be able to afford a home. But to sit on the sideline and try to time the market, there's powers that be that are way above you and I that are controlling this market. They're not, and they're going to, you know, they're not sitting on the sideline.
Yeah.
You're driving down the street, you see huge buildings going up and huge investments and things of that nature. You know, any time is a good time if it makes sense for you. And we're actually going to touch on some of those factors on how to determine if it's something that you can afford, something that's going to be sustainable long term.
Yes.
And what the tips would be and sort of tricks of the trade to prepare so where you are in a position to buy. Because everybody can't be a homeowner tomorrow.
Right.
You know what I mean? If you're first day out of college and you don't have a job yet, I'd love to speak to you. But if you're unemployed, it's going to be tough to qualify for a home.
Right.
So every time is not the right time.
Correct.
But I think where a lot of folks get a little overwhelmed is they see that the Fed cut rates by 0.25% and they're saying, oh, you know, darn, I missed the rate cut. Or,
Right.
Or I missed the raised rates and now I'm never going to be able to afford a home. Instead of trying to just watch that day-to-day media, just remember that everybody's in the same boat and that there are some things you can do to put yourself in a position where, you know, you kind of have to level the seas a little bit. You have to be kind of like a ship. You can't be just too jerky with your decision.
Right.
And it's going to be sustainable in the long term.
Yeah. And people do make a lot of decisions based on emotion and based on fear. And the goal here is to really kind of break through all that because you watch the news and the news is a fear money making media platform. You know people watch the news because they're addicted to fear. You know, and so if we can break through some of that noise and really just speak to like what it honestly is, you know, and again, it could be the right time for you to buy a house this coming year, and then it might not be, and that's okay. It's don't let the outside of media and other things influence what's the right thing for you.
100%.
And see, I like talking to you, and this is probably why you've been on this podcast for 3 times, because you do shoot straight. When I send you clients, I know that you're not trying to trick them or swindle them into doing something that they shouldn't be doing. If they shouldn't be doing it, and maybe they need 6 months to prepare or a year to prepare, you're completely upfront about that because you're looking out for people's best interests. You're not looking at a person as a number, as a, you know, I'm going to try to navigate this to your best interest. You're looking out for their best interest.
Or, hey, I'm going to get you locked into a $5,000 mortgage payment just because you could have maybe afford it with your debt to income ratio, but you've already told me you're capped out about $3,000. And you know what I mean? You got to give people a realistic look at stuff.
Absolutely. A bank can pre-approve you for money, but it's really the realistic day-to-day, what your monthly expenses are and all that stuff.
Exactly. I mean, one thing, and you kind of gave me a small blueprint of what we're going to talk about today, but one thing that's really important, and I think it's really a good first step, is to really carefully choose the professional that you work with.
Yeah.
One thing about the home buying process, especially when you're really close to being under contract or are under contract, is one, you get your credit pulled, you're getting about anywhere from 20 to 40 phone calls per day from credit bureaus. Now, I do have what's called an opt-out number, which blocks your information at the bureau level.
Yes.
So when you get your credit pulled, you alleviate those spam calls.
How about that?
Yeah.
I mean, people need to listen.
Some
Take
people
take note of that one, man,
Yeah,
because
it's
you're
huge.
right. When you inquire about a mortgage and you start that process, you are going to get slammed with spam.
Yep. Or you fill out something on homesforyou.com or some random website,
Yep.
and all of a sudden it's asking you 15 different questions. Most likely it's farming your data to somewhere.
Yep.
And if that's what you want to happen, that's fine. But,
Sure.
But don't, you can expect a lot of phone calls to come your way. So the first thing I would say is, choose a professional that you truly believe has your best interests in mind.
Right.
Realtor, lender. Title's a little different because that's really a behind the scenes thing.
Yep.
That a lot of people really don't have a direct relation to.
Yep.
But title people are important.
Insurance people are important too.
Homeowners insurance, extremely important. You're going to have somebody on, Kevin McShane, who can talk a little bit about picking your insurance company.
Yep.
Making sure your coverage is where it needs to be.
Yep.
There's, times where for $5 more, you can get $25,000 more coverage on, say, your basement or something like that. And if your insurance agent just wants to win on price and never is telling you that his quote doesn't include maybe this or that,
Yeah.
that's going to be something that as a homeowner, you may not know. And as a buyer, as a customer, you're not going to know the ins and outs of that.
Sure. Yeah. And when you are comparing these things too, you have to compare apples to apples, because when you see somebody giving this a ridiculously low interest rate that's not even comparable to anybody else,
Yeah.
there's hidden strings attached.
Yeah.
It's not what it's clear. And to go on your point too with, finding somebody that you trust. And from a real estate agent's perspective, a local lender is so much more important to use than, say, a big box chain mortgage company where you're calling an 800 number to a call center in Michigan that you could be talking to a different person every time.
100%.
Like local lenders, their reputation's on the line, because if that loan doesn't get to the settlement table, your that puts a bad mark on you. Where, hey, if it's that big box chains, who cares? Like those people are just trying to bring in the numbers. You're trying to bring in the quality to people instead of the quantity.
There's definitely less of a vested interest for them to close each transaction.
Yep.
They're answering the phone. They're collecting the necessary paperwork. They're giving you a rate.
Yep.
That rate may be better or it may not be better.
Yeah.
They may be the type of lender where they say, hey, this is our rate. There's really no negotiation.
Yep.
They're not picking up their phone Friday after 5, or really any weekday maybe after 5. They're not picking up their phone on the weekend. They're not going to know when they get an inspection back or when they get an appraisal back, the little things to look for that you could say, hey, don't freak out. And you have somebody out there in a day, as opposed to it goes through underwriting and then 7 days later they need a railing put in and now we're not closing on time.
Yep.
And a lot of lenders, like even when you shop, let's say you shop rate online. Like this has happened to me countless times. Okay. Someone says, hey, I did some shopping around. I did some research. So I already know where this conversation's going. Okay, what'd you find?
Yep.
Look, think rates change. The 10-year changes every day. Sometimes there's going to be a rate a little lower available than maybe what you locked with 2 weeks ago.
Yep.
That's the nature of the business. I'm a service. I'm here to make sure you're happy. You should never walk away from the transaction feeling like you got the raw end of the deal.
Right.
But I can't tell you how many times it's been, Farmers Bank of Omaha has a 5.375. I'm like, call them.
Yeah.
Please.
Yeah.
Because it's not, maybe if you have a $100,000 brokerage account with them, maybe if you live in Omaha.
Yeah.
So, there's teaser rates. And part of that is just to kind of get you to call in. They farm your data out. And then you'll get 25 more calls from lenders. So in the beginning, definitely choose someone you trust.
Yeah.
If you're going to a car dealership and you can't stand the sight of the guy that's selling you the car and you think he's selling you stuff you
Shifty
don't
or
need,
whatever. Yep.
Don't buy a car from him.
Yep.
It should be the same with a real estate agent, be the same with a loan officer, and then we can have a practical conversation.
Yep.
If you do say, hey, I really want my payment to be this. Hey, I was shopping around, I see this. What can we do? Because there are options a lot of times.
I think comfort of who you're working with supersedes that 0.1 interest. You're trying to shop that interest rate. People shop interest rates more than they actually shop the person that they're going to be working with.
Yep. There's a lot that goes into closing on time.
Yep. My gosh.
I've got a good track history with you of closing on time, and it's important because people also need to realize the seller can walk if you don't close on time.
Yes.
So
and you don't know.
They could have an offer sitting right there.
100%.
So
and that's happened. That does happen. And so I think that's as a real estate agent, we're probably 9 times out of 10 when somebody looks to buy a house, they have the real estate agent first before they have a lender.
Most of the time, yep.
Most of the time. So if you're a real estate agent, or if it's me or whoever is recommending you someone, you should probably know that we're recommending you somebody that has a history, a track record of getting the deal to the settlement table.
Yeah.
And
doing a good job. The customer's happy.
Because at the end of the day, if you don't get to the settlement table, none of this, all the work is for nothing.
100%.
So we're going to, if your real estate agent is connecting you with a loan officer, you should probably know that they're going to be doing a really good job because they've done it time and time again.
I mean, and to be honest with you, I had someone quote, they got a quote for Rocket Mortgage, which they're not a bad company by any means.
Sure.
It's like the Walmart or the Sam's Club of loans, right?
Okay.
It's not going to be the best person-to-person service probably, but they could probably get to the closing table in 45 to 60 days. Our rate was more or less the same.
Yeah.
So by using someone like a Bayshore or a local lender, you're not getting the raw end of the deal. I mean, realistically, most lenders are actually selling or brokering to the same 5 people anyway.
Yeah.
So it's very unusual to go to lender A and get quoted a 7%, go to lender B and get quoted a 5%.
Yep.
And there not be some very tangible differences in either the information that was provided or tons of different things.
Sure.
But, the market is so tight right now, partially because people can do their own research. So most lenders are going to put their best foot forward pretty quickly.
I think so, yeah.
Because there's a lot that goes into it. But at the end of the day, by trusting your representative, I think that at least you have peace of mind that person is not laughing behind your back that you got some ridiculous deal. It's just not how it works.
Right.
It's in nobody's best interest.
Right.
I want people to be happy. I want the realtor that I'm working with, the TMA, you, Dan, Adam, I want all you guys to say, hey, God, my client was super happy. Their payment was good. It came out a little lower. We closed on time. I look good. Zach looks good.
Yep.
And now next thing you know, their brother's buying a house.
Exactly.
Their mother's buying a house.
It's all about reputation, folks.
It 100% is.
Yeah. So give me I'm a buyer coming into this market, and let's say I want to buy in the next 6 to 12 months. Let's talk about some of the things that we can do to prepare ourselves to be in that best position possible to buy a house, to be the most attractive buyer for a seller.
Yeah, so it's easier for some people than others to be attractive, and I think we both know that. You know what I mean? Some people are naturally attractive, and some people have to work really hard at it.
Hence the 2 people that are sitting at the table right now.
It's effortless.
Zach is effortless. Me, on the other hand, I have to work a little bit harder at it.
And that's okay.
And that's okay. I have a wife that loves me and 3 daughters that think I'm a halfway decent guy.
Okay.
Most days.
You're up doing your 5 a.m. workouts. I follow you on Instagram, so I see where...
Well, I'm just trying to get as big as you and a couple of your other friends because, I'm getting older.
We'll drop some gym recs later, but hey, man, if you ever want to hit the 5 a.m. snow run and do the David Goggins and carry the boats, I'm with it.
Yeah, I'm out on that.
Okay.
You just said run. I'm
walk.
out.
I walk now.
Okay.
I walk now. But so... once you get someone in your eyes that you want to work with, as far as, you got your realtor, you got your loan officer set up.
Yep.
Okay, I'm ready to at least get prepared for something in the next 6 to 12 months, like you said.
Yeah.
First thing I like to do with somebody, have just a conversation about their wants and needs, where they're at, what they're looking for. Because a lot of times people might not know, hey, do I want a condo? Is building going to be cheaper? Is a condo like a huge no-no? Do I not want a townhouse? Do I need this? Do I not need this? Is this okay? So, kind of have a conversation about your wants and your needs, just kind of generally, before digging into your exact hourly rate and all that stuff. kind of just figure out, okay, why are we here?
Yep.
And once that's established and we kind of get to the financial portion of it, I can do two things. Some folks really are averse to talking over the phone, which is fine with me. If you want to fill out all your information online, go for it and I can review it. But, we could either have you fill out something online, which kind of just is going to build out like a loose financial profile for us.
Yep.
Or I'll have a conversation with you and just kind of take that information for you. Name, date of birth, social, where you work, where you live, how long you live there, how long you work there, what you make.
Yeah.
Simple stuff.
Yep.
Address any concerns just based on that conversation. Hey, I'm unemployed. Okay. Hey, I'm self-employed. Okay. Maybe you wait 2 years. Maybe not.
Yeah.
So, kind of just build rapport there. And then, once we're really ready to get started breaking down some numbers, we do what's called a soft pull credit report.
Okay.
So before you even have to opt out, I can do a soft pull. It's basically a pre-qual. I will be able to see all the information that's going to be available on a credit report. We'll look at your debt to income ratio. I can see if you were late on anything, if you had a bankruptcy, if you already have another mortgage, what type of mortgage it is, all these things that you might not think come into play, but they do.
Yep.
And just have a conversation based on there. There's people day one, they got no debt, they've got a great job, they've got $100,000 saved up. And I'm going to tell them, hey man, for what you're looking for, go for it. You're ready tomorrow.
Yeah.
You're living in your mother's basement, you've been saving up money and you've had your job for 2 years. You make my life super easy.
Yeah.
Go find a house, pick it out, and we'll get you in there in 3 weeks. You'll be turning the doorknob.
Yep.
Some people need to take a little bit of time.
Yeah.
There's certain parameters on certain types of loans where you need to wait maybe X amount of days, months, or years before you can close on this type of loan. If you've had a bankruptcy, we ran into this before. Basically, you need to wait it typically 2 years. Sometimes it's 1 year if you could prove a hardship. That is key, though. Never assume you're disqualified. Oh, I had a late on a credit card, I'm never going to be able to buy a house. That's not true.
Yeah.
That's not true.
Yeah.
Oh, I've got, and we were going to talk a little bit about credit score. Your credit score really is going to be sort of your credit score is like a one-stop shop for like a financial, it gives you a number, right? But if you have a 670 or a 690, that doesn't necessarily mean one thing or the other. Now, 680 is sort of a benchmark, so those might be bad scores to.
Okay.
But if you have a 684 or a 687, they're realistically going to be the exact same thing. It could just be a matter of when your credit card reported. Did you put the $200 of groceries this week and it reported or it didn't? So, don't worry so much about the credit score. When I'm looking at that credit report, I'm looking for something that's going to take us out of the running.
Gotcha.
Did your car get repossessed? Did you have a bankruptcy? Do you have a late on a mortgage payment? Are you in a bankruptcy right now? Are you, did you have a foreclosure? And then once I get through that kind of initial consultation, address any of the big stuff. Hey, you need to have your job for this long, need to be this far out of maybe this or that. Then we say, okay, what is your goal? Most folks have some time frame, whether it be they're waiting for their kids to get out of school. That's why a lot of people move in the summer because you don't kind of want to uproot everything in the middle of the school year. Maybe it's get through the holidays. Maybe it's wait on your promotion. Maybe it's, your lease is up in March and you don't want to double down on your lease. Most people have a time frame, and ideally, if that time frame works, we can sort of get you pre-approved and then have you sort of I call it just the heavy lifting. Get the heavy lifting out of the way. Let's get your easy stuff. Let's get your driver's license. Let's get your W-2s. We don't need your up-to-the-day pay stubs or your up-to-the-day bank statements right this second.
Yeah.
But if we can create a general financial picture for you, it's pretty easy to make a plan. It's actually, the process is actually pretty simple.
Right.
It really is.
So what's the most challenging thing for people, do you think?
The most challenging people that I see in this market right now is it's just hard to save money. It's hard to save money. So a lot of people have a little bit of, it's just a little hard to get that down payment together.
Yeah.
That's where first-time home buyers usually have a hiccup or a time frame.
Yeah.
But once again, if you're a first-time home buyer, you can go 3% down conventional. $400,000 house, that's $12,000.
Right.
I mean, there is a realistic aspect. Like, can you get into a house with zero money down? Yes. But if you don't have any money, it might not be the best time. Like, if you have $0,
Right.
it might not be the best time to buy a home.
Right.
You may want to have a nest egg. There's more that goes into it, the qualifying, than just you qualify for this payment.
Yeah.
Because the furnace is going to go up at some point. You're going to need
There's
a new
going to be
roof.
expenses.
Even if you get a new roof and it's covered by insurance, you're still going to have $1,000 deductible.
Yep.
And then you're going to get a flat tire one day. You're going to something. Not that I'm wishing anything on our viewers here, but something's going to happen. You're going to get sick.
Yeah.
You're going to hurt your leg, and you can't.
And you want to
work.
be in a position when that emergency comes up that it's easily to handle, and you're not missing a mortgage payment.
Exactly, and it's not going to financially put you back.
Destroy you. Yeah.
Exactly.
Yeah.
Because like missing a mortgage payment is one of the, then you're getting to the, okay, maybe I can't refi in the future. So yeah, and I talk about all of that with people. I have a spreadsheet that I can use. It's just a cash flow analysis. It lets you know, hey, at the end of every month, you're going to have about $300 to just do whatever you want with, whether that be savings, whether that be, and make people need a realistic approach. And when you do start breaking down some of those bank statements and you see like, oh crap, like I'm going to Wawa every day and it's $12. Like, it doesn't seem like a lot,
Right.
but it's $70, $80 a week. And then 52 weeks a year, you do the math.
Yeah, sure.
So those things add up quick.
And it helps people, like you said, it helps people realize that. It's like,
and
maybe
doesn't mean you're a bad person. I love Wawa, but
I love Chick-fil-A.
Chick-fil-A is crazy expensive at this point.
Drew, can you get some Chick-fil-A for us? Oh, okay. Never mind.
My order can sometimes go over $30 just for myself.
Oh, it takes a lot to fuel
It takes a lot to feed the machine.
Yeah.
But I like nuggets, and nuggets are expensive.
Right. Right.
And I like to have a sandwich, I like to have fries, and I like to have a little side salad.
See, we like to have mortgage and food conversations kind of mashed up in together.
It all goes in. It goes into one bucket.
One bucket.
Absolutely.
Yes.
But what and sometimes people it just comes down to tightening the screws for a few months to get some stuff together.
Sure.
It doesn't mean you can never go.
Yeah, I think you need a plan.
Yeah.
There's been plenty of times where people just want to flip the switch and go. And they haven't done any homework. They haven't done any preparation. It's like, well, you can't. But you can in 6 months.
Exactly.
So the more you plan ahead with all this stuff is the easier it's going to be on you and have those questions answered. And so that you're not in a position where you're like either trying to make a move and you're not necessarily ready right now, or you're allowing that fear that we were talking about earlier from basically paralyzing you because there's all these questions that are floating in your head that could easily be answered with just talking to somebody.
30-minute phone call.
And you might, I think some people are worried like that phone call that they're going to be forced into, making a decision and buying a house. It's like nobody's forcing you to do anything. No. We're here for when the time is right for you, not for me, not for you, but for our clients.
Yeah, and we're certainly not here to judge you in any way. Really the best thing you can do is to sort of stop wondering about the situation and get some answers and create a plan and create a time frame, especially if it's like, you're looking for your first home. If you're waiting for the right time to maybe, I don't know, buy a Harley or something, there's going to be less tangible things. Like, do you want one? Is it an impulse buy?
Yeah.
You know what I mean? But if you're talking about buying a house, this is usually someone's first big purchase when they kind of take that leap of faith for the rest of not the rest of their life, but usually that's a pretty monumental shift from going from where they were to owning their first home. They're going to be there for a while. There's now some financial implications if you don't pay that rent or if you can't just walk away from it. So, making that plan and just having good people in your corner to assist you is really important. You definitely don't want to be in a position where, let's say you take a new job as self-employed. Now you're 1099. Now you can't buy. It was an offer you couldn't refuse, but now you're in a situation where you sort of shot yourself in the foot a little bit. And that can happen, unfortunately.
Sure.
So it's really about just making that plan and sticking to it, getting some questions answered, and just be fully transparent.
Yeah.
Like I said, we deal with people all the time from all walks of life, all different situations, and we're here to help more than anything else.
Yeah. Talk about that a little bit. You have a debt to income ratio. Are you finding more people that are trying to apply for a loan? Do they have too much debt that they need to get down? What debt should they be focusing on? Or, should they be focusing on this debt over this debt? Like, talk a little bit about that.
Debt to income ratio a lot of times is not the issue that we run into.
Okay.
So on an FHA loan, typically you can qualify for about 55% of your gross income.
Okay.
So your debts plus your mortgage payment. You divide that by your gross income.
Yeah.
And you can go up to 55%. So if you're making $8,000 or $9,000 a month, even $6,000 or $7,000 a month, you're looking at a payment maybe $2,000 or $3,000 a month. That gets you a decent amount of house.
Okay. Yeah.
You know what I mean? So debt to income ratio typically isn't our issue. A lot of times the issue is that cash building aspect in that beginning stage and kind of just getting ahead of your bills, so it's not like everything's going to your monthly expenses as is.
Right.
A lot of times people are paying kind of an inflated rent right now, which makes it a little hard to get ahead.
Sure.
So I think that's one reason why it is important to call me sooner than later, because I can't tell you how many people they've got like a car payment that's like $180 and they owe $5,000 on their car. And they've got $10,000 to their name, and they pay their car off. I would rather you have $10,000 in your account that we can use towards the transaction.
Okay.
And then you can pay your car off after we get into the home.
Right.
Because that $180 isn't going to hurt your debt to income ratio by that much.
Right.
If it is, we can do it when the time comes. But I would not worry about zeroing out your debt if you're someone who is unsure about what you qualify for and is in a bit of a pinch to save cash. Now, if you have a super high yield loan that's $500 a month and it's got a $1,500 balance and you're paying interest only, okay, there's things that we can talk about to get it off so you could start saving. But as far as paying off every installment debt that you have, paying off student loans, which a lot of times are deferred, paying off car payments, which at this point can be 7, 8, 9, 10 years on an amortization, so the payment is pretty low. It's not about zeroing out your debt. And the debt to income ratios, especially if you have a little bit better credit, are very forgiving.
Gotcha. Yeah, it's good to know, because like you said, unless you know what you should be focusing on, what you shouldn't be focusing on.
Yeah.
You
could be focus on zeroing out.
You could be
debt.
shooting yourself in the foot. And
yes.
One thing that people do sometimes when they shoot themselves in the foot is they pay off that credit card or whatever, and then they close out the account, and all of a sudden now
your score's dropped.
Your score is dropped because that history is no longer there.
Yep.
And so
I agree. And if cash is something where you're dealing with sort of a finite amount of cash, which I guess everybody is in some way.
Yeah.
But if you're dealing with a finite amount of cash and you're trying to save to that, say, $10,000 or $15,000 mark, don't just go hurrying up to pay off every credit card that you have. It might be the right thing to do.
Yeah.
But I want to talk about it with you first.
Right.
Because more than likely, if we're in the next 2, 3, 4 months of buying a home, make that $70 minimum payment.
Yep.
Pay everything on time. Don't run up the balance so you're getting more and more debt necessarily. But keep as much money as you can. And then after you close on your home and you have a little left over, sure, pay off your car. Pay off your credit card.
Right.
Do this, do that. But more than likely, you're probably going to want to get some new carpet or a new couch or some new paint.
Yeah.
And anyone who's been to Home Depot for anything knows that stuff adds up real quick.
Most certainly does.
I just bought some insulation for like a 5x5 wall, and it was like $200. And I was like, I didn't realize
everything's getting so much more expensive these days,
So it's like you never know. There's really no cheap fixes.
Yeah.
So definitely keep that cash close. Don't worry about paying off every debt that you have. I do know we wanted to chat a little bit about some first time home buyer stuff. And maybe it's the fault of people like us that do some of these programs where they really push first-time homebuyer programs and incentives, and those things certainly do exist. Not everybody qualifies for them.
Yeah.
And they have pros and cons.
Sure.
It would be nice if you could sort of sign up on the website to freemoney.com and, okay, send me my check. I'd like to buy a house now.
There's always a string attached.
Yeah.
And that string attached could very well be the right situation for you.
It could very well be worth it.
Right.
The number one thing is a lot of times first-time homebuyer programs can have income limits.
Okay.
So if you're
Makes sense.
if you're a two-person household, there's a decent shot you're going to make too much, unfortunately.
Yeah.
For certain programs. There's a really good program that I've used with you and your team this year. It's called SELP, Settlement Expense Loan Program. There is an income cap on it, but as long as you buy in Harford County, then they will give you anywhere from like 3 to 6% typically of the purchase price. They do require a cash flow analysis that's evaluated by, it's not so much an underwriter, but it's like a
representative of the program.
I say representative. Yeah. I'm not sure if they hold a title specifically as far as like underwriter or account representative, but they're basically the decision maker. That money sits in an account that they've allocated for that program of government funds.
Yeah.
And then, that is available to someone. Now, once again, that's a Harford County buyer.
Yeah.
There is an income limit. It has to be your primary residence. Have to pass the cash flow analysis. There is a purchase price limit, so you can't buy, say, a $700,000 house with it.
Gotcha. Makes sense.
So there's those restrictions, but it might be a good fit for you. Maryland Mortgage Program is a decent fit for some people. There are some things that make it not the best fit, especially if you're someone who is trying to make an aggressive offer. You do have your money set aside at least for your down payment.
Yeah.
You may be better off making an aggressive offer, possibly asking for some seller concession, which you and I, we get that a lot. We get seller concessions from the sellers. And it sounds a little crazy to the buyer when they go in and they say, well, you mean they're just going to give us $15,000? Well, sort of, maybe, sometimes, actually, yes.
Could be.
But there's ways that we can structure the offer to get some money back. Maybe
Correct.
we raise that purchase price a little bit. Your payment's a little bit higher month to month,
But not much.
but you're keeping $15,000 in your pocket, or you're getting $15,000 that you didn't have before.
Right.
So that goes with, once again, getting that initial consultation out of the way. You and I know how to work together. We're having conversations about the person, about what their best path forward is going to be.
Yep.
And using our best judgment on, hey, I really think this person's a good fit for this, not so much this. There's always the conventional versus FHA argument. Some people can't go conventional. Some homes can't go FHA. So there's a lot that goes into it.
There's so many factors.
There's a lot of factors.
There's a lot of factors.
It's best to just get it all out in the open in the beginning.
Yeah. I think if you could just sum up everything that we've talked about is to say that every individual has their own individual things that need to be addressed.
Yeah.
And until you have that conversation with somebody that you trust, that you can trust, that's going to look out for you in the long run, whether you're ready to buy a home now or it's going to take 6 to 12 months, you at least start that conversation so that we can create a map, a plan that'll help you get to where you need to be.
Without a doubt. We create that roadmap, that treasure map, and the options are yours.
Yeah.
We're not gonna say, hey, you can afford $400,000. I really only like you at $200,000. No, it's your choice.
Yeah. Ultimately, it really comes down to how much can you afford without going broke once you buy a house.
No one wants to be house poor.
Nobody wants to be
It's
house
no fun.
poor. So
It's tough.
that's awesome, man. And again, I bring you to the table today, and the third time that I brought you to the table, just because you are one of our preferred lenders, and and it's because you do such a great job, and you are genuinely looking out for people, that we entrust you to shoot straight with people, and give them the options that are best for their situation. So, I can't say enough about our relationship between real estate agent and loan officer, that you do get the job done, and you do the job very well. And you should be acknowledged for that. So
I appreciate that, man. I mean, it's been great working with you guys this year.
Yeah.
It's been a stepping stone. The mortgage business changes a good bit, or the real estate business, I should say, it changes a good bit.
Sure.
Not just rates, not just home prices. Obviously, the compensation stuff that's been happening with NAR. I think now more than ever, people really keep a close eye on, quote unquote, the Fed and what the Fed is doing.
Yeah.
Even though most people don't have any clue, rightfully so, of what the Fed is actually doing.
Yep.
I'm fielding questions from people about the Fed, Hey, is the Fed meeting today? I'm like, oh, I actually they are.
Are you bringing the donuts?
Yeah, like good for you.
Yeah.
So, but it's been great working with you guys. And, as the business continues to grow, we'll continue to like just really hone in our relationship. And there's so much you bring to the table as far as just local relationships.
Mm-hmm.
Even from a seller's agent perspective, they know that you're probably bringing a good offer, a qualified buyer.
Yeah.
You're not going to ask for the doorknob to be tightened on the inspection report, or you're going to walk.
Correct.
You're not doing shady stuff with smitten offers and backdoor this, backdoor that. I mean, there's integrity that comes with the job.
Reputation is everything.
Yeah.
Yeah.
And that's something that, I've always, thought you and you've instilled it, I think, in your guys. It's like, hey, we're going to do it the right way.
Yep.
We're going to treat people the right way. We're going to be where we're going to be, or say where we're going to be on. We're going to be there on time.
Yeah.
We're going to have open houses. Like, trust me, there's some crappy realtors out there.
There's crappy people
and
in
crappy
anything.
lenders out there. But there's just people that are sort of, they'll figure it out.
Yeah.
We'll list their house and someone will come buy it and I'm not going to do anything. And it happens.
Yep.
But, you guys put your best foot forward on every deal.
Yeah, we
Big,
do.
Small, and it's been great. And I mean, everybody that we work with and sit with at this table, it's always smiles and hugs at the end of the
100%. And that's what it's all about.
Yeah.
So,
man.
hey, look, if people have questions, they're going to be buying in 2025 or beyond or whatever, and any questions that they have about lending, mortgage, how can people connect with you?
So people, best thing to do, call me.
Yeah.
Call me directly. My phone's always on.
Yep.
If I happen to miss your call, typically I'll call you back. Phone number's 443-299-9285. Posted on here. I'm on Instagram. I'm not super active on a day-to-day posting crazy videos that get 7 views like some lenders are, but
You're still on Facebook.
I'm still not on Facebook, and
this is the third time I've had you to the table. We've talked about this every single time, and
you're doing the heavy lifting on Facebook for me. I consider myself sort of the Wizard of Oz of lending. I'm sort of behind the curtain a little bit.
You need to step outside the curtain there,
and I may. And this might be the catalyst that does it. But you can find me. Just give me a call, and then I'm very easy to reach. So give me a call on my phone number. I'll pick up. Hit me up on Instagram. Zac Does Loans.
Yep.
And we'll get you where you need to be.
Folks, this is the guy that you need to contact if you're planning to buy a home in 2025. Thank you so much for coming in today. If you haven't connected with us yet, we're on YouTube, Facebook, and Instagram at The Markland Advantage, and we even do TikTok, which you still don't do, at TMA Real Estate. Just calling you out.
You don't want to see me on TikTok, I don't think.
Maybe not. But please connect with us there. And if you have any questions, you can certainly reach out to us directly as well. We're just one click away. So again, thank you so much for coming in today. I hope you enjoyed this. If it brought you any value at all, share it, comment. If you didn't like it, don't make any bad comments. Thank you. Until next time, folks, live your life to the fullest. Zac, thank you very much.
My pleasure, man.
And we'll see you soon. Take care.